The oil market opened in the first trading day of the year with a robust rally. Brent buyers are betting on the new highs. The Brent contract with the nearest delivery surpassed $53 a barrel for the first time since March 4, 2020. Judging by the steady bullish run, Brent is capable of testing new highs. WTI futures for February hit the level of $49.50 a barrel. Both benchmark grades gained over 2% today. Optimism in the oil market comes from expectations of a regular meeting of OPEC and its allies. On Monday, the cartel has to decide whether the market is ready for higher oil output rates or not. Taking into account the mutant coronavirus from the UK and soaring daily rates worldwide, large oil exporters are expected to cap oil output at current levels in February. Besides, the vaccination campaign is going on at a slower pace than anticipated. OPEC and allied producers have not reached a consensus at the early stages of the meeting. Nevertheless, most participants are poised to maintain January production levels. Analysts pulled by Reuters also believe that the cartel will decide to put production rates on hold. Apart from OPEC Plus meeting, the US dollar's dynamic is also making an impact on oil prices. The oil market is benefiting from the weak US dollar, which has erased all gains of last Thursday and sank to new lows against a basket of its rival currencies. To sum up, analysts doubt steady momentum in oil prices due to uncertain prospects of the global economy. In the first half of the year, tepid petroleum demand could drag oil prices down. A rally in the oil market supported the Russian ruble, which closed the last year on the pessimistic note. Today, the ruble won back losses and recovered to 73 against the US dollar, having regained over 1%. So buyers of the dollar-ruble pair can seize the opportunity to break the level of 73 now. That seemed a tough challenge in December. Today, the ruble is keeping the bullish momentum. However, investors share the pessimistic outlook for the Russian currency. The ruble is expected to tumble to 80 against the US dollar as Washington could tighten its anti-Russia rhetoric. If such risks do not come true, the dollar-ruble pair could remain in a range of 73 or 75. Experts reckon that the fair forex rate for the ruble is 70 against the greenback, so the ruble has prospects for further strength, though on the conditions. The ruble will be able to advance to 70-71 and even test the 67-68 against the US currency, provided that oil prices grow 10 or 12%. The dynamic of the Russian currency is firmly linked to developments in the oil market. You were watching Market News on InstaForex TV channel. We wish you profitable deals and waiting for you on our channel in several hours. See you!